Hello, welcome to SuccessTrack TV. I'm TJ, and I'm so happy that you found my channel. For today's video, I'd like to talk about the various factors that affect the price of gold. But before we begin and get into this video, make sure to hit the subscribe button and the bell icon to get notified of our new videos. Then leave a comment below this video saying I subscribed. I'll try my best to reply to as many comments as possible. Let's get started and talk about gold. Gold is highly prized for its beauty and rarity. Gold is malleable, meaning that it can be easily pounded into thin sheets or molded into different shapes. It is also a good conductor of electricity and is not affected by air or water corrosion. Gold has a long history of being a valuable metal. It has been used for currency, jewelry, and decorative objects for thousands of years. It is widely considered a safe haven asset and is often used as a hedge against inflation and economic uncertainty. Gold is a versatile and highly valued metal that continues to play a significant role in many different industries and economies around the world. There's no doubt that gold is a great investment. While the price of gold can fluctuate in the short term, it has generally trended upward over the long term. Nonetheless, the price of gold can fluctuate, and that could worry a lot of people who have invested in it. There are many factors that can affect the price of gold. Knowing these factors could make a huge difference when investing in it. The number one factor that affects the price of gold is inflation. Inflation is the general increase in prices relative to the purchasing power of money. Gold tends to be a hedge against inflation, meaning that the price of gold tends to rise as the value of money falls. This is because gold is a tangible asset that has inherent value, whereas the value of paper money is derived from the strength of the government that issues it. When people are worried about the stability of their local currency, they often turn to gold as a more stable store of value. This increased demand for gold can drive up its price, even in the face of inflation. Another factor that affects the price of gold is supply and demand. The increased demand for gold can drive up its price. Gold is used in a number of industrial applications, such as the production of electronics, and changes in the demand for these products can also affect the price of gold. On the supply side, the amount of gold being mined and made available to the market can have an impact on its price. Additionally, the actions of central banks, which hold large reserves of gold, can also affect the supply of gold on the market, and therefore, its price. Political events can also affect the price of gold. Political events can affect the price of gold in a number of ways. One way is through their impact on the value of currencies. If there is political instability in a country, or if there are concerns about the government's ability to pay its debts, the value of that country's currency may decline. This can lead to increased demand for gold, which is often viewed as a safe haven asset, and cause the price of gold to rise. Political events can also affect the price of gold for their impact on interest rates. If there are concerns about political stability or economic conditions, the central bank may lower interest rates in an effort to stimulate the economy. Lower interest rates can lead to a weaker currency and increased demand for gold, which can cause the price of gold to rise. Another critical factor that affects the price of gold is income. If people's incomes are rising, they may have more disposable income available to spend on luxury goods like gold jewelry, which can increase the demand for gold and cause the price to rise. Income can also affect the price of gold through its impact on the overall economy. If incomes are rising and economic conditions are strong, this can lead to increased economic activity and demand for goods and services, which can boost the overall demand for gold. This can cause the price of gold to rise. On the other hand, if incomes are declining or economic conditions are weak, this can lead to decreased demand for gold and cause the price to fall. Finally, income can affect the price of gold through its impact on the demand for alternative investments. If people are looking for ways to diversify their investment through portfolios or protect their wealth in times of economic uncertainty, they might turn to assets like gold. This can increase the demand for gold and cause the price to rise. And lastly, exchange-traded funds, or ETFs, can also affect the price of gold. Gold ETFs hold physical gold as well as gold futures contracts. When investors buy shares in a gold ETF, they are effectively buying an interest in the underlying gold assets held by the fund. This increased demand for gold can cause the price of gold to rise. On the other hand, when investors sell their shares in a gold ETF, it can lead to decreased demand for gold and cause the price of gold to fall. Now that you know the various factors that affect the price of gold, you can make informed decisions about whether to buy or sell. One thing is for sure, gold can be a useful addition to a well-diversified investment portfolio, especially in times of economic uncertainty or market volatility. One last thing before you leave, if you liked this video and found it helpful, make sure to hit the subscribe button and the bell icon to get notified of our new videos. Then leave a comment below to share your thoughts, and I'll do my best to reply to as many comments as I can. Also, make sure to watch the next video that's coming up. Thanks for visiting SuccessTrack TV.